Hello and welcome to Wall Street Confidential. I'm George Moriarty, executive editor of Street.com, here with Jim Cramer. How's it going this morning,
All right,
Jim?
how are you?
Good, great to see you. So today we open up the Journal, and what do you know? On the front page we have them bashing some
it's Greg Zuckerman.
private equity deals.
Greg Zuckerman has a history of being negative. He's not as negative as a Justin Lehart. I look at bylines. And when I look at bylines, because it's a hit ratio. There's some people who are better than others. Greg's a very nice guy. But this story was about how there are 3 deals that were bad. I know you have information about how many deals there were, so what's the ratio?
According to Buyout's newsletter, which is the industry source for this stuff, in 2006, U.S. deals, 1,011 deals in 2006. Disclosed dollar value, and they disclosed maybe half, $315 billion. That's thanks to Dan Primack over at Private Equity Hub.
Well, I mean, I wish I had that same hit ratio in stocks. I wish that the stocks I bought, I wish there were only 3 out of the 22 that I own for Action Alerts that were bad. And I think that what happens is your mindset is to write the story as if it's catastrophic. Because there's a lot of people whose jobs are dependent upon them being faux cautionary. So, that's a story that I think would make you sell the opening. Because you would say, well, listen, maybe the private equity put is going away. Now, it's almost impossible for the retail investor to sit back for a second and say, well, what's the percentage? And if you don't give them the percentage, if you don't have that Dan Primack number, then I think you think, wow, Zuckerman's written this piece, which is pretty deadly and devastating. But, I always urge people to read the flip side of an article. If there's an article that says that interest rates are going up, look at the idea of the piece of paper that is going up. I love trading bonds. When that piece of paper, the 10-year that everyone's focused on, went to $94.2, right. 94.5, that is such an attractive piece of paper, 5 1/4, down 6 points from where it came. And people don't think like that. They read that Gross is bailing, which is really farcical. I'm supposed to trust him now. He said rates are going to 3, and I trust him now. I mean, he has no credibility in my eyes.
But it's the value of being that source out there where you never have to come back and say you're sorry. Just keep changing your tune, and everybody writes it.
I just want people to recognize that stories are written for reasons, and they are not reasons to make you feel like you should be opportunistic.
So let's focus now quickly on making money. So we're getting some pullback. Stocks are coming back. Is there a sector we should be watching for some of these potential M&A deals on Monday?
Yeah, we're not down enough.
No.
We're just not down enough. I mean, there hasn't been, I don't think there's a deal that would be motivated by these declines yet. I mean, I was looking at Bed Bath & Beyond. And mostly because Zuckerman says that linens and things is bad. Right. So therefore I say, hey, listen, he doesn't know what he's talking about. I don't say it like that. He's a statesman and terrific. And what I come back in is to say, okay, Bed Bath, it's down a lot, $1 billion in cash, has this Christmas tree store that you could sell. Maybe it would get a $41 bid and it's at $38. It's not enough vig for me.
Interesting. Christmas tree stores, quick aside, people love that stuff. They go there all the time, and it's not just Christmas. It's amazing.
True, but they need to be able to sell something.
Yeah. There you go. That's Wall Street Confidential. I'm George Moriarty. He's Jim Cramer. Stay tuned for more from the Street.com TV.